Welcome to the mining news on Commodity TV. Today with Karora Resources, Osisko Gold Royalties, Tarachi Gold, IsoEnergy and Caledonia Mining. Karora Resources reported a consolidated gold production of 30,652 ounces from its Beta Hunt and Higginsville mines in Western Australia for the second quarter this year. Gold sales for the quarter were 30,398 ounces. Karora's consolidated unaudited cash balance was $114 million at 30th June this year. The higher cash balance reflects proceeds from the completed bought deal financing, partially offset by capital expenditures associated with progressing work on the second mining operation at Beta Hunt, which remains on budget and ahead of schedule, and is expected to be completed in the first quarter of 2023. In addition, there is the pending acquisition of the Lakewood mill, both of which are key drivers of the growth plan to increase gold production to an anticipated 185,000 to 205,000 ounces by 2024. Karora is really undervalued and at buy levels. Osisko Gold Royalties achieved approximately 22,240 attributable gold equivalent ounces called GEOs in the second quarter of 2022, which was a record for the company since its inception in 2014. They recorded a preliminary record royalty and streaming revenue of 51.5 million Canadian dollars and preliminary cost of sales excluding stripping of 3.7 million Canadian dollars in the second quarter, resulting in record quarterly cash margin of approximately $47.8 million or 93%. The royalty and streaming portfolio is excellently positioned and deliveries are expected to continue to increase in the second half of the year as ramp-ups at Mantos and Eagle move towards rated capacity. At a time of increased volatility in the mining sector and rising costs across all sectors of the economy, Osisko's inflation-protected business model continues to thrive. The company pays a quarterly dividend and the stock is really cheap. Tarachi Gold finally provided an update regarding the progress of its Magistral mill and tailings project in Mexico, as well as other ongoing corporate development initiatives. At Magistral, at the final phases of metallurgical test work to support the design and conceptualization of plant modifications to the existing Magistral mill are nearing completion at SGS Lakefield. Results were originally expected in the last week of June, but due to delays in the lab, these results are now scheduled hopefully for end of July, beginning August, with a final report expected from Osisko Engineering Canada in the coming weeks. The work currently underway in the lab relates to the SART, sulfidation, acidifying, recycling and thickening circuit that Tarachi is proposing to add to the existing plant and which is consistent with the development plan described in the PEA. The addition of the SART circuit will not only allow for more efficient recovery of gold from the enriched leach solution, but will also reduce cyanide consumption and produce a high-grade copper concentrate as a byproduct. Discussions are ongoing with potential capital providers regarding funding for the Magistral development, as well as potential offtake partners, with most interested parties awaiting the results of the final metallurgical work. These results will determine the final quantity and quality of gold and copper products and validate the assumptions used in the PEA. Despite the recent decline in commodity prices, the company expects Magistral to be a high-yield, high-margin gold producer with the following metrics in the PEA with a base price of $1,600, total sustaining cost of $705 per ounce gold after accounting for copper byproducts, after-tax internal rate of return of 85%, payback period after taxes of 12 months. If Tarachi gets the financing, the stock faces a significant re-rating as it becomes a producer. IsoEnergy announced a maiden independent mineral resource estimate for the Hurricane uranium deposit on Larocque East in the eastern Athabasca Basin in Saskatchewan. The indicated mineral resource of 48.61 million pounds U3O8 is based on 63,800 tons of rock with a sensational grade of 34.5% U3O8, including 43.89 million pounds U3O8 at an average grade of 52.1% within the high-grade area. The inferred mineral resource of 2.66 million pounds U3O8 is based on 54,300 tons grading 2.2%, and the indicated mineral resources are very insensitive to the cut-off grade due to the high grade and compact nature of the Hurricane deposit. Summer exploration includes diamond drilling at Larocque East, Geiger and Trident for a total of 7,000 meters, and airborne geophysical survey at Evergreen, Spruce, East Rim, Edge and Full Moon. IsoEnergy is well prepared for the increase in uranium prices and has a super project. Caledonia Mining reported record gold production from the Blanket mine in Zimbabwe as of 30th June this year for Q2 of 20,091 ounces gold, a quarterly record. Gold production for the first half of 2022 was 38,606 ounces, up about 29% from the first half last year, which should meet the 2022 target production of 73,000 to 80,000 ounces. A bang for the buck is the intended acquisition of Bilboes in Zimbabwe. With only $250 million capex, an open pit mine could be built here with a minimum 10-year mine life and about 170,000 ounces annual gold production. This would make Caledonia a multi-mining company, and with Money Green, it would have 3 mining projects in production by 2027-2028 with an annual production of around 300,000 ounces gold. Then the dividend should increase massively in addition. If you have staying power and don't mind quarterly dividends with the prospect of 2-digit returns per year over the next 3-4 years, you really should own Caledonia Mining. Please note the disclaimer that appears now. The shares discussed are part of the SRC Mining Special Situations Certificate, and I'm a shareholder in all companies. Thanks for watching us, and bye bye from Austria.